In today's digital age, our smartphones have become gateways to a myriad of services, transforming the way we live, work, and interact with the world around us. From ordering food to booking a cab, everything is just a tap away, making our lives more convenient and efficient than ever before. Among these digital conveniences are instant loan apps, promising quick and easy loans to meet urgent financial needs, often with the allure of minimal paperwork and instant approvals. These apps have witnessed a surge in popularity, particularly in countries like India, where a significant portion of the population remains financially underserved, and traditional banking services are not always accessible. However, beneath the facade of convenience lies a dark underbelly of predatory lending practices and harassment, pushing vulnerable borrowers into a vicious cycle of debt that can be difficult to escape. The accessibility of these apps, often requiring minimal documentation and offering instant approvals, makes them alluring, especially to individuals with limited financial literacy or those in desperate need of quick cash. What many borrowers fail to realize is that these seemingly small loans come with exorbitant interest rates and hidden charges, quickly escalating into unmanageable debt traps that can have severe financial and emotional consequences. Furthermore, the data harvested during the loan application process, including access to contacts and galleries, becomes a weapon used for harassment and extortion when borrowers default, leading to a breach of privacy and security. This essay delves into the murky world of instant loan app scams in India, uncovering the tactics used by these apps to exploit vulnerable individuals. We will explore the modus operandi of these apps, shedding light on their deceptive marketing tactics and the psychological manipulation employed to entrap borrowers, often preying on their financial insecurities and lack of awareness. Through real-life examples, we will witness the devastating impact of these scams on individuals, families, and communities, highlighting the human cost of these predatory practices. Finally, we will discuss practical steps to protect oneself from falling prey to such schemes and emphasize the urgent need for increased awareness, stringent regulations, and responsible lending practices in the digital finance sector to safeguard consumers. The rise of instant loan app scams is a stark reminder of the potential dangers lurking in the digital world, where convenience can sometimes come at a steep price. While technology has undoubtedly empowered us, it has also created opportunities for exploitation, particularly when financial vulnerability intersects with a lack of awareness and regulatory oversight. It is crucial for individuals, policymakers, and technology companies to work together to mitigate these risks and ensure that financial inclusion does not come at the cost of human dignity and well-being, fostering a safer and more equitable digital financial landscape for all. Imagine this. You're facing an unexpected medical bill, a family emergency, or simply need extra cash to make ends meet. The stress and anxiety can be overwhelming, and you need a quick solution. Traditional lending institutions seem daunting, with their lengthy paperwork and credit checks. The process is often slow and cumbersome, leaving you feeling frustrated and helpless. Then, a notification pops up on your phone, an advertisement for an instant loan app promising a hassle-free solution to your financial woes. It seems like the perfect answer to your problems. This is precisely the scenario that instant loan apps exploit. They position themselves as saviors, offering a lifeline to those who are financially vulnerable or lack access to traditional banking services. They market themselves as the heroes of the financial world, ready to rescue you from your monetary troubles with just a few taps on your phone. Their marketing tactics are designed to be enticing, often using slogans that emphasize speed, ease of access, and minimal documentation. They promise quick approval and instant cash, making it hard to resist. The loan application process is deliberately simplified, typically requiring only basic personal information and a few taps on the screen. This ease of use is a major selling point. This instant gratification further strengthens the appeal, particularly for individuals in dire need of funds who may not fully comprehend the terms and conditions. The excitement of receiving money quickly can cloud judgment. The promise of quick cash, coupled with the perceived anonymity of a digital transaction, can be a powerful motivator, leading borrowers to overlook potential red flags. The convenience and speed can make it seem like a no-brainer. Many of these apps target young adults and individuals with limited financial literacy, who may be less aware of the risks associated with high-interest loans and predatory lending practices. They prey on those who are most vulnerable. They are often bombarded with targeted advertisements on social media platforms and through SMS messages, creating a sense of urgency and the illusion that borrowing from these apps is a common and acceptable practice. The constant exposure can make it hard to resist. The ease with which loans are dispersed, often directly into the borrower's bank account within minutes, further reinforces the perception that these apps are trustworthy and reliable. The quick transfer of funds can be very convincing. This, however, is often the first step into a carefully orchestrated debt trap. The initial relief can quickly turn into a cycle of debt and stress. The following sections will delve deeper into the predatory tactics employed by these apps, exposing the harsh realities that lie hidden behind their alluring facade. Stay tuned to learn more about how to protect yourself from falling into this trap. While the promise of quick and easy loans may be tempting, the reality of borrowing from instant loan apps is often far from straightforward. These apps lure users with the promise of fast cash, but the true cost of these loans is often hidden beneath layers of fine print and confusing terms. One of the most insidious aspects of these scams lies in their deceptive interest rates and hidden charges. Borrowers are often unaware of the true cost of their loans until it is too late. Unlike traditional financial institutions that are subject to regulations and oversight, many instant loan apps operate in a legal gray area, allowing them to charge exorbitant interest rates that can range from 30% to as high as 300% per annum. This lack of regulation means that these apps can exploit borrowers without fear of legal repercussions. These rates are often obscured in the fine print or disguised using misleading terminology that borrowers may not fully understand. Terms like processing fee or service charge are used to mask the true cost of borrowing. In addition to the exorbitant interest rates, instant loan apps often levy a slew of hidden charges, including processing fees, service charges, and late payment penalties. These additional costs can quickly add up, making the loan far more expensive than initially anticipated. These charges are frequently not disclosed upfront and are added to the loan amount, further inflating the overall debt burden. Borrowers may find themselves paying significantly more than they originally borrowed, with little understanding of how the costs escalated so quickly. Borrowers, already struggling to meet their financial obligations, are then trapped in a cycle of endless repayments, with a significant portion of their payments going towards servicing the ever-increasing interest and fees rather than reducing the principal amount. This cycle can be incredibly difficult to break, leading to long-term financial distress. Furthermore, the short repayment periods, often ranging from a few weeks to a few months, exacerbate the situation. Borrowers are given little time to repay their loans, increasing the likelihood of missed payments and additional fees. This creates immense pressure on borrowers to repay, making them more vulnerable to further borrowing and pushing them deeper into the debt trap. In many cases, borrowers take out new loans to repay old ones, perpetuating a cycle of debt that is difficult to escape. The lack of transparency in loan terms, coupled with the complex fee structures, makes it difficult for borrowers to understand the true cost of borrowing and the long-term financial implications of their decisions. This confusion is often exploited by loan apps to maximize their profits at the expense of the borrower. The deceptive interest rates and hidden charges are just the tip of the iceberg when it comes to the predatory practices employed by these apps. Borrowers often find themselves overwhelmed and unable to keep up with the mounting costs. The following section will shed light on the harassment tactics and psychological manipulation used by these companies to extort money from their victims. These tactics can include aggressive collection practices, threats, and even public shaming, adding to the stress and financial burden faced by borrowers.